Hello, this is John Piper with the weekend video, and it's Saturday the 29th of February. It's another fairly unusual date. I don't know how many other reports I've done on the 29th of February. Anyway, let's have a look at Bitcoin to start with this morning. Bitcoin seems very adept at making patterns which are interpretable in two ways. Now, this looks like a pretty clear five-wave advance. 1, 2, 3. Third wave is a bit messy, with sort of big jagged thing in the middle. 4 and 5. So we count it as a five-wave move. Then got an A, a B, and a C, which could be complete. Look at that in a minute, and has gone down below the 50% retracement level. Right, that's a fairly reasonable pattern. However, if you look at it a bit more closely, you can see this could be an A, a B, and a C. That could be an A wave. That could be a B wave, and that could be a C wave. And you notice that the A wave from here to here is of a not dissimilar length to what could be the C wave from there to there. So, okay, I think the five-wave count is the preferable count, but you know, that's one possibility. The ABC is pretty clear, A, B, C, and you know, 50% retracement is respectable. Let's have a look at the action in a bit more detail. By looking at the correction itself, this looks like a pretty clear A wave, A, B, C. Not really many other ways of interpreting it, I don't think. But that could be a 3 actually, looking at it. It's a 5-part 3 move. 4 and a 5, so that could be a 1. This looks like a 5 in fact, which confuses the issue yet again. Followed by a B, C. But we could reinterpret that as a 1 wave, 2 wave, and this as an impulsive. Hard to count really, but that could be a 3 wave. There could be a 4 wave coming in. You know, so it's not easy to interpret this as what's going on. Also, the actual rally off the low at the moment does not give us much signs of an impulsive move. We'll go down a leg again. Okay, there are potentially 5 waves up, as it were. You could count a 1, 2, 3, 4, 5, but ABC count also is pretty valid. ABC, but sharp. 1, 2, possible 3. 1, 2, 3. There's a correction in there. 4, 5. That's a 5. So you know, there is potential there, as I said. And okay, now we're going sideways, which is a corrective formation. Looks a bit like a triangle, in fact. But we're not getting very clear patterns, and Bitcoin is very good at making clear patterns when it wants to. So it does raise a lot of question marks. In the longer term, the first chart I showed you. Yeah, we're 50% retracement, that's pretty good, but this bounce is not the stuff of dreams are made of, so a little bit open right now. Looking at Ethereum, we had a very impulsive move up really, 1, 2, 3, but of course the 3-part move is an ABC. We've now got a much bigger decline, A, B, C, which you can count as a 4th wave, but it's rather large for a 4th wave at this stage. So again, it's asking the question of the wave count, suggesting that maybe the count was not impulsive. In fact, this is actually a corrective rally, an ABC in other words, despite the speed of the thing. And that we're coming down again, I'm seeing 50% almost, not quite. Let's have a look at the rally since then. Well, Ethereum's a bit more positive. We have got a 1, 2, 3, 4. A bit messy, but there are 5 waves there. There's also a ABC here, which is encouraging. This, of course, less so. I mean, it hasn't really done very much with that low. So it's pretty open, really. It's not a clear count at the moment. We need to see something a bit more positive and definite than we're getting right now. Lots of stories doing the rounds, of course. Some people are being forced to liquidate other assets, i.e. gold and crypto, to pay for losses on stocks. I mean, people trading stocks on margin will have had an appalling time in the last few weeks, and could easily need to sell other assets too. So this could just be a reaction to the virus, which is meaning people have to liquidate other stuff. That does make sense, of course, but it's destroying the wave counts. I mean, the wave counts aren't everything. It's actually the market action that's important, what we're looking up or down essentially. But Obviously, wave theory is something I use a lot, and these patterns are not totally helpful. I mean, gold, for example, was looking really good for a decent thrust up. Instead, we had this very sharp decline coming down, which has rather destroyed the wave pattern on gold. I think Elliott wave theory is probably the least casualty of the virus, but if that's a 1, maybe we actually got an irregular ABC-B, maybe now a C wave coming in. I mean, it's extraordinary circumstance, I guess. I mean, the virus is in a fairly extraordinary situation. I said a few weeks ago that the virus would peak in China, or certainly the Wuhan province, about now, I think, or maybe in a couple of weeks. But as a virus sweeps an area, then it runs out of victims, so it's bound to decline. So that'll happen first in the Wuhan province, then in China, and then in other countries as they progress. So, I mean, Italy is sort of on the cusp. Well, it just started up a week or so ago. So that'll be the first European country to actually pass into the phase where it's fading away, and other countries will be sadly infected as it goes along. It seems at this point there's no reason why any country will avoid this. The containment appears to have failed. You've got 10 days with no symptoms. It's very, very hard to do much about it, really. Vitamin C is supposed to help. As I said before, I was just stocking up on vitamin C. And other, I mean, I've ordered some of the forsythia, as mentioned in the film Contagion, which I watched. And, I mean, if you're American, you might well say it predicts the virus because it hasn't happened there yet to any large extent. But whether it predicts it correctly remains to be seen. The film doesn't really touch on other areas, so I can't say that it's predicting the virus very well in the rest of the world. It doesn't really touch on it that much, but it certainly did mention fish markets in China and Hong Kong. So it did get that pretty well, but I guess that's a fairly common way of a virus starting up, so maybe that's not so surprising. It's a good film though, and I think it's worth watching, as I said before. And silver's the same really. We had a pretty solid, what looked like a 1 of 3 and a 2 of 3, all pretty hunky-dory, but then we just collapsed. This was a daily chart. So again, the pattern is being destroyed, and hard to say where it may go next. But if stocks continue to suffer, then I think this made this correction, if that's what it is, may well continue. Now looking at FTSE, I was suggesting we may have started a major bear market. So far from the all-time peak we saw back in May, around 7,900, A, B. Now this very big C wave coming in, which I think I doubt this is going to be over really. I mean, there's commentary that Trump's going to lose the election through this, but the Democrats seem very disorganised, and I suspect Trump will pull something out of the hat and win the November elections. I guess I doubt he'd be blamed for the virus, or he could well be blamed for the handling of the virus, but that remains to be seen, as America seems to be one country is not suffering too much at the moment. Anyway, I think we have got a bounce. Let's have a look in the shorter term chart. This is a 5-minute chart, so we have got a 5-wave rally. 1, 2, 3, 4, 5. Who knows? But I'm not just going to continue because I don't think this virus is going to let up for some months. Really, I think it's going to the news will just get worse and worse until it peaks, and then it'll fade away and it'll be over. But I think until that happens, it's going to be a pretty constant diet of bad news for a while. This is an hourly chart of the DAX, so I should mention the time zone more regularly. The orthodox top back in on the 20th, just above 13,602, which was a prior high. This red line is that level. So an ABC down to there. Then it looks like an irregular B wave, an unorthodox top. I've got my terminology correct, and down we fall from 13.8 down to 11.8, so at 2,000 points so far off the DAX. So look at the shorter term. I'll go on the 5 minutes. It's just getting sideways, really not terribly conducive to seeing a rally of any substance at this point. Well, the Dow peaked on the 12th of February. This peak here, straight down really, from 295 or thereabouts, 296, 5,000 points almost in a couple of weeks. Fairly dramatic stuff. Let's look at the shorter term. Looks like an ABC really, from the low, A, B, C. again, the markets get oversold. Too many people have sold. Everybody's sold, so there's creates a sort of vacuum to the upside, and buyers have to come in as nobody's left to sell. So any rally doesn't really mean much more than just that the technicals come into play. So I would think we're going to see more lower prices continuing into next week, really. So this is not a more positive report. It's difficult to find anything that actually looks that great. I mean, clearly we're oversold to a major extent, and I say there are technical reasons why markets will bounce when they're oversold. But if people losing money in their stock accounts, forced to liquidate other assets, then it's a sort of self-feeding frenzy, really, which is not really good news for markets, really. On that note, I think I'll call it a day. I hope you found that interesting and useful. Back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.